Hey everyone, I got one for you passive income investors out there who are curious which one is the better dividend stock to buy, Starbucks or McDonald's. In fact, this video is not just for passive income investors or dividend stock investors. Starbucks and McDonald's could be excellent investments for anyone. In fact, until recently, I had Starbucks rated as one of my top 25 stocks to buy in 2024. That's overall stocks, not just dividend stocks. Now, let's compare these two and make the decision which one is the better stock to buy, looking at their dividend yield, but more than that, looking at their revenue growth, their profitability, the return on invested capital, and their valuations to decide which one is the better stock to buy today. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Starbucks and McDonald's, very similar dividend yields, 2.52% for McDonald's and 2.89% for McDonald's, and 2.89% for Starbucks, I should say. Starbucks dividend yield has increased, not so much because Starbucks has increased the dividend per share, but because the stock price has decreased by so much in recent weeks and recent months that it made the dividend yield look better because you're taking the dividend per share, dividing it by the stock price. And so if the stock price is lower, it means the dividend yield is higher. But many investors, myself included, would prefer a higher dividend yield because the dividends are increasing, not because the stock price is increasing. Nevertheless, it is what it is. These are the dividend yields for McDonald's and Starbucks. Now, the next thing I wanted to compare them on is revenue. Now, they both have tens of thousands of locations worldwide, McDonald's and Starbucks. Starbucks has a bit of a mixed model where it owns some locations and it franchises some locations, whereas McDonald's is more so a franchisee-based business. McDonald's also owns some locations, but those are more for testing purposes to make sure it knows how to operate the business effectively, and then so that it can implement those practices and share those practices with its franchisees. But primarily, McDonald's is a franchisee owned business. And what that means for McDonald's is it's less capital intensive. McDonald's doesn't need to be the one to spend the capital to open a new location. What McDonald's needs to do is find an investor, find an entrepreneur who wants to open a new McDonald's location, and find those entrepreneurs that match with McDonald's desires in terms of what they're looking for in their entrepreneurs, to make sure that the level of quality, the level of standards are up to par. Starbucks has a mix. It does some franchising, it does some ownership, but it's more of a true mix instead of McDonald's where it's just a small fraction where it's owned. So revenue growth, much better with Starbucks, 36.53 billion compared to 25.76 billion for McDonald's, and that's going to be the case for the next several years. Starbucks is going to grow its revenue much faster than McDonald's. McDonald's, you'd be lucky to get mid-single digits revenue growth, 4, 5, or 6% would be remarkable for McDonald's to deliver to investors, whereas Starbucks can regularly achieve mid to high single digits revenue growth, 7, 8, 9% revenue growth for Starbucks, because Starbucks is still opening more new locations percentage wise compared to McDonald's, and at the same time Starbucks is still generating stronger comparable restaurant sales growth through a mix of more customers and higher prices and higher pricing and new product categories, etc., etc. McDonald's, being geared more towards lower income folks, doesn't have as much pricing power when it comes to new product introductions, whereas Starbucks does have that pricing power for the new product introductions. McDonald's does have pricing power, increasing prices on existing products, right? If McDonald's increased the price of its French fries by another nickel or another 10 cents, that's not going to stop you from buying those fries. But If McDonald's launches a new burger at $12, you're probably not going to buy that burger, or the typical McDonald's customer is probably not going to buy that burger. So there's the differences between the two. McDonald's being a slower growth company, more asset light. Starbucks being faster growth, more asset heavy. Even though Starbucks itself is not an asset heavy business overall, it is when you compare it to McDonald's, which is very asset light in the restaurant industry. The next thing I wanted to compare is the operating profit margin, and here you'll notice the huge benefits from being an asset-light business model. McDonald's generates a phenomenal operating profit margin of 41.8%. That's up from less than 30% in 2015. It's an excellent business operation, and they execute well on their business model. Starbucks, meanwhile, 15.24%. It has struggled in recent years since the pandemic. It made some adjustments, it shifted the business, it made some effective decisions, but overall, it's been up and down. It hasn't been a clear-cut success for Starbucks. Some moves, some strategies, like the expanding of the digital ordering, the digital membership service, those have been successful because people ordering on the app are more profitable for Starbucks because they don't need to pay a cashier to take the order, and that same employee can instead spend time making the drink and order and fulfill more orders than would otherwise be the case. McDonald's also has benefited from the digital app rollout. They shifted quickly at the onset of the pandemic, and the rollout of the app and the food delivery side of McDonald's business has been a real boon to profitability for the company. Now McDonald's can be had for individuals, not just that are driving through or not just that are walking by, but now anyone that wants to order can order McDonald's, and that makes it more accessible, and more folks have been ordering McDonald's. The company has reported great success from the rollout of that service, and they will continue to benefit from that going forward. However, Starbucks reverses the advantage here on return on invested capital. Even though Starbucks does invest more of its capital into the business for each dollar of revenue, it does get a good return on that investment because they've been successful in using that capital. When they open a new location, more likely than not, that location becomes profitable given the company's standards and given the company's metrics. When the company announces a new product, it's usually successful. Overall, they've used their capital wisely, and that's generated strong returns on invested capital. 59.35% is remarkable for Starbucks. You can understand why I had Starbucks rated as one of my top stocks to buy in 2024. Before I downgraded it a notch, I still have the stock rated as a buy, but I took it off my list of top stocks to buy recently because of a very disappointing quarterly result the company reported in its most recent quarter. Meanwhile, McDonald's, not bad at all with a 26.59 return on invested capital, and that's been rising steadily from below 20% in 2015. It's up now to 26.59%. Finally, they're trading at very similar valuations. McDonald's and Starbucks, forward price to earnings 19.11 for McDonald's, 18.75 for Starbucks. McDonald's had the better operating profitability. Starbucks had the better revenue growth. Starbucks had the better return on invested capital. And I suspect Starbucks will continue to have better revenue growth than McDonald's longer term. So, given all of those factors, if I had to pick between one of these two dividend stocks to buy today, it's a tough decision. It's not an easy one. It's not a no-brainer, but I would go with Starbucks instead of McDonald's today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.